Hey everybody, Jeff Wilson here with the Wilson team at Front Point Mortgage, coming to you with our Monday market update. Just a real quick rundown of what happened last week with the CPI PPI report. Basically, everything came in line with expectations. Inflation was 0.3% higher. Indicators are showing that we could be headed in the right direction, though, in month-over-month data, which kind of kept things under control. But another month of inflation coming in higher isn't a friend for rates, isn't it a friend for the real estate market? PPI 0.2% higher, showing things like eggs and produce came up significantly in cost, some at 150% of what it was 2 months ago. Again, showing that inflation is just not under control. So rates have been moving up ever since the president-elect was elected president. He had been, talking about crypto, talking about the stock market prior to his election, and then he was elected, and people started pulling money out of the mortgage bonds and putting them into crypto and putting them into the stock market. And so when money is getting pulled out of the bonds, the price of bonds have to go up to drive new, to get more attention for new buyers. And so when those bonds go up, mortgage rates go up. And that's why we have higher interest rates ever since we have a new president elected. That also, month over month. So that's why we've seen rates, higher than we expected. What could be our savior in 2025 is bond investors look at numbers as in compared to month and year over year numbers. So the year over year numbers in January should be significantly better than the numbers that came in January 2024. Then again, February 2024. So those year over year numbers could be our saviors. There's not a lot of room for them to be worse. So as long as these numbers come in better year over year, then we should see rates trickling down. Trump's economy isn't exactly the hugest benefactor of a better rate environment, but if some of these things get drawn, in line sooner rather than later, then we'll start seeing just a slow ticks of interest rates down. We expect interest rates to be back in the high fives by summer of next year, which will be a really good real estate market. And these initial jobless claims reports have been helping keep rates under control with inflation and the Trump stock market and crypto flow. If these jobless numbers were coming in hotter, then we'd be in real trouble with rates. We'd be back in the 7.5% range. So that's where we are now. I won't be in the office too much starting middle of this week through the New Year's. But you're more than welcome to call me with any questions or anything that you need. Please like and subscribe these so the YouTube channel gets a little bit more tread and we get more activity and hopefully get some more business stirring. If you like the videos, please let people know so that more people are watching and it helps me in my business. Starting in the new year, January 6th, I think it is, I will start doing these exact videos every week. They should get better. I'm able to put more time into this now. I've staffed up, I've hired people, which has been good, and it gives me more time to do things like this to help you guys get the information you need. Happy holidays. Hope you're doing well. Hope you have a great and happy holiday season and happy new year, and that we start the year off strong in 2025. Talk to you in 2025. Again, have a great day, have a great year, and talk soon.